Brothers, welcome to this session of the table topics. I'm J.B. Gall. I'm a Nebraska 2001 graduate. I'm on the Housing Advisory Council and on the University of Kentucky House Corporation. Also, I know a lot of you from my time working for the fraternity. In my professional life now, though, I work with OmegaFi, and one of my colleagues, Caitlin Hanna, who is our sales manager, is here to present today. Caitlin is a Sigma Kappa from the University of Georgia, and she also serves on Sigma Kappa's, on her chapter's House Corporation, but has lots of interaction with their National House Corporation too. So I will let Caitlin kick our presentation off today.
Thanks, JB. And thank you all for joining and for inviting me to be here with you guys virtually today. Excited to dive in. I have a couple of anecdotes, some tips and things that I think will be helpful, but I encourage participation too. So if anyone has a good experience or advice to give to others, I think the great part about these roundtables is learning from each other. So definitely want to keep the floor open. Like JB mentioned, I serve on my housing corporation board. I graduated from the University of Georgia in 2012. I've been on the board for about 4 years now. I don't think I'll ever be allowed to resign. So I am a housing volunteer for life, as I imagine a lot of you guys are. So we can dive right on in. The goals today, similar to the topic, are you prepared for the next big project? One of the key pieces of that is just making sure financially all your ducks are in a row. So the main thing we're going to talk about is the importance of your nonprofit tax-exempt status and how that impacts your ability to move forward with your fundraising plans, make sure that you're in a solid state to undergo those renovation projects and all of those things like that. And we're going to tie it all together really just with best practices that are going to help you whether you're planning a project or not. So hopefully there's a little bit of value for everyone. So really basic, a lot of you might know this, so we won't spend a lot of time on it, but what is the Form 990? It's an informational tax return that is required for all nonprofit organizations by the IRS. It is something that is tied to your tax ID number, which you're also required to have as a 501c7 or 501c2 nonprofit, which most of you all are going to fall under those two categories. It does need to be filed each year. And really the goal here is to let the IRS know that you're still here, you are who you say you are, and to make sure that you guys are not required to pay federal corporate income tax on your net profits. So that's a key piece here, and that's really going to move us into why this is important. So basic level here, if you don't know which form to file, there's 3 forms, the most basic of which is the 990N. As a house corporation, if you all own the house, 9 times out of 10, you're going to fall in this general 990 category with gross receipts over 200,000 or assets over 500,000. So this is the most common one we see with house corporations, followed by the EZ. They're all fairly straightforward in what they require. As you progress through these different forms, different things are required. So we'll talk a little bit more about that too. Most important, when to file. Making sure you file your personal taxes on time is something all of us focus on, I'm sure, but we sometimes don't apply those same skills that we do in our personal and professional lives to our volunteer roles, if I'm being honest. So, just making sure that's top of mind. It's going to be due on the 15th day, 5 months after your fiscal year end. So based on the most standard fiscal year dates of July 1 to June 30th, or the calendar year dates of January 1 to 12/31, most of you are going to have a filing deadline of either November 15th or May 15th. And that's something that, if you're working with an accountant or whoever your treasurer is on the board, that's something that, they should be aware of and preparing for and having everything ready before that deadline passes.
Lenol, can I provide something here?
Yeah.
Yeah. First-hand experience. So I mentioned I'm on the Kentucky House Corporation, and the undergraduate chapter it's a bigger chapter, so they have to file an EZ. And because of COVID and things, the past two treasurers had not filed the 19 or the 20 tax return. And so I helped the treasurer do it. We filed them right before he went on Christmas break. And then this week they received 2 letters from the IRS saying that they'd received the filings, but they were late. And so there was a $3,000 penalty and a $5,000 penalty for each of them because of how overdue that they were. So the N's don't have a filing penalty, but the EZs and the full 990s will. So that's another reason why it's super important to get them filed on time.
Great point. And really, with the broader conversation we're having here, many of you are probably either planning for a renovation project or you've done one in the past and you know what it takes. And having that $3,000 or $5,000 get eaten up by something that you weren't expecting, just long term doesn't work out well. And yeah, the information required is pretty basic. You need to know your employer identification number. If you don't know it, that's something we can help you look up. There's a way to look it up on the IRS website too by the name of your organization. So lots of different ways to find it. Like I mentioned, these common fiscal year dates. And then depending on the form, you might need more. So with that full 990 that most of you are filing, you actually need a balance sheet for the year. You need to be able to show your net assets and liabilities. You need to be accounting for depreciation and amortization, all of those kinds of things throughout the year that are a lot more than just collecting rent and paying your bills. So making sure that reporting is consistent and how it needs to be based on the form you need to file can save you a lot of time at the end of the year. So the big question, are you in compliance? I spend most of my time in the sales side of things at OmegaFi, speaking with House Corporation volunteers. And most of the time, the initial answer to that question is, of course, our treasurer is filing every year. What I find is that there's sometimes just general confusion about what's required by who and when. So one of the biggest things I've seen is confusion between what your state requires. So typically by your Secretary of State's office, they have a registration process for all corporations, including nonprofit corporations. So a lot of times there's confusion between making sure that annual registration is up to date versus staying in compliance with the IRS annually to maintain your federal nonprofit tax-exempt status. So, happy to answer any questions if anyone's ever run into gray area there. But, just wanted to point that out. So in most cases, you're going to need to do both. So keeping those deadlines top of mind can be really helpful. Like I mentioned, you can look up your status. I have a link here, and I'll be happy to share these slides afterwards so everyone has them. But you can type in your EIN right here and look it up in real time. You can see if you've ever lost your status, if it was ever reinstated, and kind of where you're at right now, and you can make a decision about what you need to do next. In the event that your status has been revoked, that's okay. It's pretty common, and that's something that it's easy to fix. So just making sure you make it a priority and have the right tools and team helping you get there. Reinstatement can be really easy. There's 2 different options, postmark date and retroactive. The postmark date one here is going to be a simpler process, and it's going to be reinstated as of the date that you mail those reinstatement documents. The retroactive is going to be a full reinstatement back to the date that it was revoked. And we'll talk about the differences and what one might be the better fit based on your goals here coming up. So like JB alluded to, with the chapter that he was working with, they hadn't filed for 2 years, so they needed to file to make sure they maintain that status. If you fail to file for 3 consecutive years, you do risk losing your nonprofit status. And really the big reason why that matters is you're potentially liable to pay, federal corporate income tax on your net profits from that time you were revoked until you're reinstated. So if you were in the middle of a fundraising campaign and you did have significant net profits for that year, in theory, the postmark date reinstatement, reinstating you after all of that revenue has been received, might not always be the best fit. That's something that an accountant can help you sort out. Our accountant can help you sort out. So if you're confused about which one makes the most sense, there's a few different options. But one of the big reasons this matters too, and from personal experience with a group I'm working with right now, they realized that they were in good standing with their Secretary of State. They weren't in good standing with the IRS. And they had just signed up for a pretty large fundraising campaign that they want to kick off on the right foot. So one of their big concerns, and something that we see with other groups we work with too, is just donor and lender confidence. If you aren't able to say confidently that you're in good standing with the IRS and that these donations aren't going to be, reduced in theory due to unnecessary corporate income taxes, it doesn't do well for the story you're painting for those donors, the picture you're trying to paint for those lenders, and really just kind of long-term financial stability, like JB mentioned with the fines that chapter was seeing. Paying money for things that aren't necessary, takes away from all of those big strategic plans that you have and everything you have been saving for. And these are, just unique challenges that we see as housing volunteers, making sure that you're forecasting your budget based on anticipated membership. Not a lot of businesses have to deal with that uncertainty. So having everything in an organized way, consistent reporting can go a long way. And all of this can also help you with avoiding volunteer burnout. So I think, if someone's holding the reins to the finances and they find out that, they missed a filing deadline and there's a lot of work that goes involved, it can lead to burnout pretty quickly. So just making sure that everything is done on time and done the right way can really help you keep those volunteers and keep them happy. So kind of wrapping up, like, what does long-term success look like if you're doing all of these things the right way? You're doing more than collecting rent and paying bills. You're treating the house corporation like a business, and you understand all of the financial compliance requirements. And that just becomes part of your day-to-day culture and management of the corporation. And like I alluded to, just consistent reporting and making things easier can help you guys with recruiting new volunteers that I know is a challenge for everyone right now, and just making sure that people don't get burnt out too quickly there. I'd love to open it up. Has anyone had experience with, starting a project or starting a fundraising initiative and then realizing your tax-exempt status isn't in the right place, or a positive story where you did? Nope, no worries. Well, if you guys do want to talk further or have questions, there will be a Q&A time, and we have a minute or two here as well. So if there's any questions, I'm happy to jump right into that.
I have one question that probably needs a lawyer, not you folks, but are there two organizations are one, the undergraduate chapter and the house corporation. And are those independent charities, or are they one thing?
That's a good question. The fraternities policy right now is that the chapter and the house corporation should be separate entities, and they likely have separate EINs and should file separately.
Thank you.
Part of the rationale of that is, and I think Paul's from Michigan, he knows their chapter has closed before the house corporation retained ownership of the house, but in other scenarios, if a death happens, then the chapter doesn't have the assets of the property that the house corporation does. And so the chapter as an entity has no assets, basically. So there's clear separation there.
And that is what we see really commonly with most of our clients. I think most are separate entities. Occasionally we'll see a 3-entity operation where as a house corporation, if you're a 501c2, it's a title holding corporation. And, if you look on the IRS website, it gives some background, but it's going to tell you that basically the main requirement there with a 501c2 is that any net profits from the year are then passed over to another tax-exempt organization. So typically a 501c3 charitable nonprofit. So that would be like if your local house or your local chapter had the chapter entity, the 501c7, a house corporation entity, a 501c2, and then sometimes there is a local educational foundation that's a 501c3. 99% of the time, I think with our clients, we see a 2-entity operation, a 501c7 chapter and a 501c7 house corporation.
All right. Well, thank you everyone for attending this table topic or table chat, whatever. Caitlin will be at the vendor hall later this afternoon in the next session as well. If you want to talk about any of the tax services or even house corporation accounting / bookkeeping services that we offer, or chapter billing. So thanks for being here today.
Thank you all so much.